What is going on, everybody? I am here with the man, the myth, the legend, the comedian, the CPA, the therapist, I'm pretty sure you're a professional. I'm just kidding, but you
No.
really do. You really seem to do a little bit of everything, which is awesome. But I'm here with Bob Wheeler. I was actually on your podcast pretty recently, and I literally love the conversation. Like I was just telling you before we started the recording, you are one of those gems that makes talking about tax engaging. And I think there's a lot you bring to the table. So first off, thank you so much for, setting some time aside to come talk to us.
Well, absolutely. I love talking about taxes. I love talking about money. We all think about it, so might as well at least make it a little bit fun.
Yeah. So, and I think the perfect intro is a lot of people when they think about taxes, right? It's not really something a lot of people want to dive into. It's complicated. It's busy. It's not very fun paying taxes. So how the hell did you become a CPA? What threw you in that direction?
Well, I wanted to be a lawyer, and then I met a few lawyers, and I was like, yeah, I don't want to do that. So I was actually taking accounting classes just to help my grade point average, believe it or not. And I was like, and of course, it's not something you can go into if it's easy, because it's got to be painful if you're going to make money. So,
Obviously.
but ultimately, accounting was something I really enjoyed and came easy. But as I got into my tax practice, I just realized so many people had so many issues. And the truth is, so did I. I was telling other people, follow these rules, but then I wasn't following them because I had an excuse and a story and a mindset. And so once I started looking at my own personal mindset and self-sabotage around money, and I started talking with my clients, mostly that are entrepreneurs and people making nice incomes, getting into their stories, because even like this last week has been tax deadlines, and so many my clients, even though they're making $500,000, generating $1 million in gross revenue, they're like, this is the worst year ever. I didn't make any money. I'm like, you got 3 houses in La Jolla. You just flew to Paris. Not buying it, right? But their mindset is they're such in poverty, and I'm sure there are many people would be happy to swap out with them. But so that's really got me fascinated. It was just how we have this unconscious money mindset that we're operating with. We're making decisions all day long, and we're trying to figure out how to get through it and navigate it. And we don't know. And we think everybody else knows, but we don't. And so that was just really, I wanted to be able to help people. And it wasn't because I was like, oh, I'm so much better than everybody else, and I learned all this stuff. I wanted to be able to learn the rules so I could figure out where to push the rules, right? Because if I don't know the rules, then I can't know that I crossed a line, or I can't know where I can push and reinterpret. So figured learn the rules and see how I can help people.
I love that. And I actually really admire the fact that you tie in the concept of helping people, because most people, when they think about, oh, damn it, I got to go talk to the accountant, this is going to suck. But I have actually found that exact thing, that literally I was just talking to my accountant last week, and the conversations I have with him, it always feels like a very team project. And yep. One of the things I noticed from his perspective, and I'm curious if you identify with this, is that yes, there are the rules, but then it seems like every, client has like its individual puzzle pieces that you're trying to move. Do you view it as a puzzle, or how do you view, the list of issues that you're trying to solve for your clients?
Yeah, absolutely. It's definitely a puzzle, and every person is unique. And so I need to know the story. So when I'm on a tax return, when the government looks at it, it needs to, at least in theory, feel like a nonfiction, right? Right. Maybe based on a true story, but I want to go in there and get the facts. And so I was explaining to somebody the other day, a high profile person who isn't, his accountant's not writing certain things off. If I'm a teacher and I come in and say, look, I'm spending $80,000 a year in travel, that's probably not realistic. Probably $80,000 worth of travel doesn't apply to my business. But if I'm an influencer, if I'm somebody in the public eye and I'm traveling all the time and I'm going to events, $80,000 of travel might be just a drop in the bucket. And so knowing what the story is, so that I can look at that and say, well, that's a gray area, but I can support the fact that this supports your business. And if I can find a tie-in, most of the time the IRS, they might say, well, we agree with you 90%. Or yeah, actually we agree with that line of thinking. And so it's learning each person's story and then figuring out how can I advocate for them, and keep them on track, right? We want to avoid taxes. We don't want to evade them. I'm
Right.
not looking for prison time. I want to do what's right, but there are lots of places where there's a lot left open for interpretation, and I'm going to push it to the envelope when I can.
I You're hitting like the things that I look for in an accountant, which is actually one of my future questions. Because one of the things that I found early on is, like everybody else, I was super cheap and I wanted to do my own taxes. And I actually think for simple tax profiles, it's a good exercise because you at least understand some of it.
Right.
But then when I started doing the YouTube stuff and the trading and all these other things, I found, okay, like this is getting kind of heavy. And when I had my first conversation with one of the accountants I was kind of interviewing, not for the channel, but like for my business. And, they made it sound like, oh, I try to follow the letter of the law, stay away from audits, stay as far away. I never get audited, nothing like that. And I'm sitting there thinking like, that seems like a interesting approach. Obviously, audit's not ideal, but I loved that you talked about the gray area and trying to find something that there's some room for interpretation. So can you talk a little bit about just that gray area and how you look at your different clients and perceive, okay, maybe I could push a little bit here, maybe not so much here?
Yeah. So again, I work with a lot of entrepreneurs. I'm in LA. I work with a lot of entertainers. Work with a lot of people in the entertainment industry. So somebody that's got Hulu and Netflix and Disney Plus and all those things, they might actually really be watching this stuff. Yeah, one, because they want to watch it, but two, because it applies to their job. They might be wanting to look at how something's edited. They want to see what kind of music's popping these days. And so there might actually be a reason that they're going in, getting on the internet, looking to make sure that they're getting the royalties for the stuff that showed up on a TV gig and things like that. So there might be real reasons that is research, and not just a personal, oh, I need to watch TV. Same thing with whether it's travel. Maybe I'm building some real estate portfolio and I'm traveling to other cities because maybe it's better buying property in Ohio than it is in Los Angeles. And so I want to go check those things out. Or maybe I'm thinking of starting a business with a buddy and they live in another state. So I want to go travel and and maybe it doesn't pan out, but it's still an expense in expanding my business. And so I want to look at those different things and see if there's a reasonableness to incorporating that into the business. There are certain things like, I remember I had this client that was just, I go to Costco and everything's business. And I'm like, yeah, that's a little, let's don't be greedy. They got audited and, the auditor even said, look, if they had done every other receipt or if they'd taken half of all the receipts, but they were going through their like toothbrush, underwear.
Got it.
And some people would say, well, I need underwear to go to work. Well, maybe you do, maybe you don't, but it's a personal item. Your dog is not your company mascot, right? So there are certain things. If you're buying stuff at Victoria's Secret, unless you're a model, it's probably not a write-off. Maybe if you're on a My Fans page or something like that.
Hey, don't talk about my business like that. That's my other business.
You got to do what you got to do. You got to do what you got to do.
I just had to pay $690 for my utility bill. That OnlyFans page really needs to get popping soon.
Exactly. But so that's what we're doing. We're trying to look at those areas where can we maximize and does it make sense? And there's other places where I'm like, you know what? You did not spend $80,000 in dry cleaning. You work at a bank.
Right. Yeah. So one of the fascinating things about your story is obviously the line between comedian and CPA.
Sure.
Those seem like dichotomies.
Yeah.
I have got to know like how those two exist in the same ecosystem for you.
Well, it's funny. Bob Newhart is my role model. He was a CPA, worked for the sales tax department. For me, like, I'm always analyzing. With comedy, you're always analyzing, you're always observing, you're paying attention to things. And then how do I bring that back in? So in a way, it's the same thing when I'm doing accounting. I'm looking for, I play detective. I'm trying to ask for the questions you're not sharing with me. I'm trying to read into the paperwork that you think I won't figure out. And so really most of my job is playing detective and being really incredibly skeptical skeptical because clients will say to me, oh, this and this happened. I'm like, really? Because it seems like this and this happened. Oh, yeah, you're right. Or a
Wow.
client will call me up and say, you screwed up my taxes. You put down, I made $300,000. I'm like, okay, did you make this deposit? This one, this one, this one? Yep, yep, yep. That equals 300,000. Where's my money? Well, that's a different question, but the numbers are right. So for me, being able to use those skills as a comic also then helps me to get people to let their defenses down, share information with me. I don't joke about people's tax bills. I'm not like, oh my God, look
Sure.
at you owe this much money. Like I know there are certain things where I can't really joke, but I can use it as a way to play around and get information from people to just relax them because people do come in very tense when they're meeting with their CPAs most of the time.
Yeah, and I think the other correlation that I consider is the fact that you talked about that gray area in a CPI, which or a CPA, like when you're looking at taxes, and in my mind, I'm thinking like there's some creative license in there to see what kind of story you could tell. So I could totally see how those two actually play off of each other, specifically comedian to CPA. That's actually a really good structure, I think. So when I think about traders in general, which is most of my people, we hate taxes just like everybody else, and we expose ourselves to additional tax, right? So most of us, they get a paycheck from somewhere, put it in a trading account, and then they start trading. So, and ideally at the end of the year, we walk away with some money. One of the things that I see traders talk about is wash sales and tax harvesting. So I want to talk about a couple of those specific concepts with you and to get your thought process. So wash sales, could you walk us through, you don't even have to speak to me like I'm 5 because I mentally am 5. So just speak to me and tell me, what wash sales are in your world.
Yeah. So a wash sale is, a lot of times we'll sell off stock to create a loss so we can take that loss to offset some gains because maybe we just don't have any faith in that stock's going to ever recover. And so we might do that, or we might sell some stuff. We might sell some stock off, take the loss, and then repurchase some stock thinking, oh, I'll get that loss. However, there's this wash sale rule that says if you do that within 30 days and you turn around and sell that, we're not going to give you the loss. You're not going to get that right now. And so what happened in the last couple of years is I had a couple of clients with $400,000, $500,000, $600,000 worth of wash sales. They were correctly thinking, great, if I generate a loss, I can take it against my other capital gains. What they didn't realize was I needed to wait more than 30 days. And so there was a big disconnect. And when we got to the taxes, I'm like, well, you've got $1 million gain. And they're like, no, you did it wrong. No, you did it wrong. You weren't paying attention to the 30-day rule. And so if you're going to be trading, for people out there that are just starting, have some conversations, do a little research, find out what a long-term and a short-term capital gain is. The tax isn't always 15%. And even though it might be 15%, it might also be plus 4% for the additional investment tax that gets added on that a lot of people don't factor in. And if you're making over a couple $100,000, these are some extra taxes you got to be careful about. And so a lot of my clients are like, what's this? Well, you got to know the rules. And that's, again, why I became a CPA. I want to know the rules so that I can figure out how to work around them. If you don't know the rules when you're trading, you're going to put yourself in a bad situation. And I was sharing with you, I have a client who had almost $1 million capital gain, and he sold it 2 days in being a long-term capital gain. He'd been trading forever. And so when I asked him, do you know the difference between short-term and long-term? He's like, I have no idea what you're talking about. And with the money he's putting in the market, that's something you might want to know. It's a small fun fact. Don't pay extra taxes. Wait 2 days.
Well, and I think that, there is always this bit of you don't know what you don't know. And that's why it's so useful to talk to people like you. So obviously we have the wash sale stuff. And I think that the overview you did there was super useful. Can you talk to us a little bit about short-term versus long-term capital gains tax?
Yeah. So basically anything held a year or less is a short-term capital gain. And that means you're going to, if whatever tax bracket you're in, that's the tax you're paying. Now, you might be in the 24% tax bracket and effectively paying 17% because it's a graduated table. But
Right.
the fact of the matter is, some of these clients of mine will get RSUs, they'll get all these stock options and things, and they get added to their paycheck. And so their W-2 will say they made $1 million, and they're like, they made a mistake. I only made 400,000. Well, 600,000 is short-term capital gains, basically, that you're paying on, that later on when you sell the stock, you'll have basis, right? But in that moment, you're paying ordinary income tax. And so it's really important to know that, gee, if I wait 2 days, if I can wait 2 days, and pay that lower tax rate, I definitely want to do it. And so I think, again, people are just not aware of, oh, there's a real big difference between short-term and long-term. And sometimes it's just waiting a day or two.
Right.
And that's an important factor. And I think the other piece, which you mentioned about culling the losses, harvesting the losses. And this can be good. But again, here's the thing that's come up with me several times this year. Somebody will say, you know what? I lost $100,000 in crypto. Man, I can't wait to write that off on your taxes. And I'm like, wow, you're going to be writing off $3,000. And they're like, no. I lost $100,000. I get to write off 100,000. Do you have $100,000 worth of capital gains? No, you're going to be writing off $3,000. And so I'm surprised at how many people still don't understand that on your tax return, that line item is not going to be more than $3,000. Right? Unless you've released some passive losses from the sale of some real estate or something like that. But for the most part, you can only offset your losses against capital gains, and then +3. And I think there's a big disconnect there. The example that I give is I had a client who had $1 million worth of capital losses. Somebody walked in and offered to pay him $3 million for his house. And he had, after his exemptions and everything, he had $1 million capital gain. Well, he paid no tax, right, on that, because the stock happened the year before, the house happened the next year. Now, if he had reversed that and he had sold the house in the first year and then he lost $1 million, he would have paid tax on the million, and then he would have written off $3,000 a year until eternity. Right?
Oh, man.
And so it's so important to pay attention to that capital loss piece, because I had another client who was buying appreciating stock, very risky stuff, ultimately lost about $700,000-800,000. Then the financial advisor moved them into high dividend stocks. So now all of a sudden she's getting $80,000 in dividends, and I'm writing off $3,000 a year on this 700,000. I finally called the broker and I said, hey, you got to understand, I need you to be buying appreciating stock, not stock that's paying dividends. They're like, oh, got it. Right. So you got to be, CPA and your financial advisor need to be communicating.
To be honest, I love that you bring that up. And I find for myself, I'll talk to my accountant at least quarterly, typically even more than that, at least via email and stuff, because some of the timing things that you brought up, especially the one about the house and the capital loss, like that is really important for people, because that is a huge difference in what the money you take home looks like. So I think little things like that are so incredibly useful. Now, I want to ask your thoughts on something. I lament the tax harvesting mindset for traders. It bothers me. But from your background, specifically coming at this from like a money psychology perspective, when you think about it, obviously there is a benefit to that in terms of the overall tax picture. But do you see people who are using that as an excuse for essentially bad positions they had, and it gives them an easy out?
Yeah, it's interesting. When people come to me and say, "Oh my God, look, I'm able to create a loss," and they're super excited, I always say, "You created a loss." Like, let's start there. Let's not get excited. You lost money. Now, it's great that we're going to get a tax benefit if we can. And so let's use it, but let's don't get excited about losses. Me personally, and this is probably my own little bit of emotional piece in there, even though you should not use emotions when you're investing or doing business decisions. But I'm always holding hope out that even my worst stock is going to one day turn around and rally, and frickin' I'm going to get my money back.
Yep. Just waiting to catch a bid.
I'm just waiting. And so, I'm not as excited to sell it off because in my mind, it's a loss. And yes, I know sometimes you have to cut your losses. And I know there are a lot of people out there that will just buy and sell based on a schedule and not look emotionally at how it's doing. It's like, yep, it's time to sell. But me personally, when I've got clients that I know, if their advisor and everybody's like, the stock's never going to rebound, okay, take your losses and get the benefit for sure. Right. But me personally, I tend to like wait till the last minute because I hold out hope. And I just don't like I don't like being in the mindset of, hooray, I lost money. Right. I'm in my hope is that I'm always making money.
Yeah, I always viewed that as, the ego obviously is so powerful. And I always thought that was just a way for the ego to preserve itself, because I feel the same as you do. Most people will say, oh, well, I don't want to get taxed on this. And I typically would say something like, you get taxed on gains. Like, right. yeah, we want to get taxed as little for sure, but it's only on gains. So chill the fuck out and accept the fact that this isn't the worst case scenario here. So a couple things that I wanted to pick your brain on. The first one is I personally found that when I started integrating real estate into my broader portfolio, specifically as it pertained to trading, my end of year taxes actually started looking a lot better. I wanted to get your thoughts on the integration of real estate and its ability to help you as a CPA help essentially somebody's tax footprint, year over year.
So I like real estate. I'm not going to say, so I would say I love it, but it's not always fun, right? Real estate I've got so many nightmare stories. That doesn't mean you shouldn't do it. But I've had clients where real estate would really help them. And they will say, my dad was in real estate. It was a nightmare. I will never do it. Just because dealing with tenants. So that just means you need to find somebody to manage the properties or invest in a REIT, right? Like you could still get into real estate and not have to be the property manager. But having said that, I do think that real estate is such a great way to save on taxes, even if it's not immediate. Right. And so for a lot of my clients, we're not going to get the $25,000 write-off. And maybe they're a real estate professional and then they put in the time and they meet the requirements. And then maybe I'm going to get that write-off. But most of my clients, it's going to sit. And I tell them, you're going to have this bucket. It's just filling up with passive losses. And one day you'll get them. What I like about that sometimes as well is if my client doesn't, and I'm not saying I do this all the time, but if I have a client that doesn't have the best of receipts, but they know they spent $20,000 or $30,000, well, if I put that in on a passive loss that's going to be suspended, nobody's coming in and looking through my numbers and going, wait a minute. So I may be picking up losses that I'm not going to realize for 10, 15 years. Right. Nobody's going to come back and ask me to explain those numbers 10, 15 years later. And so I'm not as worried about my numbers because I'm not taking them right now. So even if somebody's spending a lot of money renovating a yard or redoing a kitchen and it's a lot of money, I'm not taking the loss. The IRS doesn't care at that point. And so I've got a little wiggle room, but being able to knowing that you've got that and then understanding that you've got these passive losses, that's one reason to be with an accountant and stay with an accountant, because I've had a couple of situations. I had somebody come in and say, look, I was so excited to sell my property. Everybody told me I was going to get a big refund. My accountant did my taxes and I owe $40,000. Well, I went and looked at the return. They forgot to release all the passive losses when they sold the property. And instead of owing a significant amount of money, he ended up getting back 20,000. Right. But thankfully he came and asked me. But by the same token, I had a client who was like, look, you're just doing a Schedule E that's losing me money. And I'm just going to go and do my taxes myself. And I said, okay, that's fine. I totally get it. You want to save $700. But here's the thing, do me a favor. Let me see your tax return before you send it off just the first year, because I'm afraid you're not going to pick up the passive losses. And sure enough, they didn't pick up the passive losses and they had a couple $100,000. Well, if you've got those passive losses and your income drops below the 150 and you can start tapping into that bucket,
Right.
you're reducing taxes. And again, they saved $700. But if I hadn't been adamant and said, look, you've been a longtime client, let me look at your return anyway, they would have just lost so much money, but hey, they saved $700.
Right. Yeah. And it's forest through the trees, right? Like, yeah, whenever it comes time to pay the CPA, it's always not the greatest time on earth because it can be expensive. But
yeah,
I do think, and I personally have found tremendous value in it, especially over when I was doing my own taxes, even when my own taxes were simple. So I genuinely think you guys are worth your weight in gold. And speaking of that, one of the things I love talking to CPAs about is you have the perspective to see what lots of people are doing with their money and what really successful people are doing, what moderately successful people are doing. I would love to, and obviously I know you can't get super far into detail, but from like a high level overview, what are some of the common threads you see very successfully, financially speaking, people doing that maybe, other people would need to be privy to or would like to be privy to?
So I think that a lot of people invest in real estate. And even if they're not managing it themselves, they've either, I mean, some people put money in REITs. I don't see that as much, but I do see people buying in real estate and having somebody else take care of that. The other big thing I would say is that a lot of people do have their brokerage accounts, but they don't manage them themselves. They've got somebody else staying on top of it because they don't have the time. They're busy. Now, unless you've got the time and you want to be a trader and things like that, that's different. But a lot of my clients are trying to create their business or come up with the next big thing, and they don't have time. And paying somebody that money, that 1 or 2%, to keep growing their portfolio, those are the people that I see significant growth. For the most part. And I also, what's great is I have a few clients that'll say, okay, can you just look at my portfolio and tell me that they made me a lot of money, or it's worth paying them the 2% because it seems expensive.
Right.
Now, one of the things I think it's important to think about in terms of a financial advisor, their job, in my opinion, isn't to make you millions of dollars. If you've got millions of dollars, their job is to preserve it, right? And to then grow it, but not in a way that's irresponsible. And so, yeah, it's great that some of these people can go out and say, oh, I'm going to make you all this money. But again, you got to be choosy about your financial advisor, do the research, make sure they feel comfortable to you. Because I had a client who really wanted to get into investing, but they were nervous. Took them to a broker that I knew. I said, leave the money in a savings account for 6 months before you do any investing. Sure. 3 months later, they've invested it in something. It loses $20,000, his $100,000 loses $20,000. And I called up the broker and I was like, what did you do? You just broke his trust. And the broker says to me, it was a sure thing. And I said, well, if it was a sure thing, there'd be $20,000 more in his bank account.
Right.
It's not a sure thing. And so, of course, that guy never wanted to invest his money ever again. And he didn't trust anybody. And of course, I never used that broker again. It's all about trust. And so you've got to trust your broker. If they're asking to borrow money from you, that's illegal, and run. But you'd be surprised how many clients have told me an advisor asked to borrow some money or asked them to invest in something on the side. Run for the hills. But it is important, I think, having an advisor or somebody that's in the know if you don't have the time. So now I do also have clients that invest in silver and gold and stuff like that, precious metals. I don't see that as much. I like investing in that stuff because I'm assuming the apocalypse is coming. I live in LA. I want to have little silver coins to buy my food.
Fair enough.
But that's the world is not coming to an end. But just in case it does, I'm going to have lots of little silver coins.
Hopefully those are still in vogue at that point.
Exactly.
So when I think about just people's approach to finances. And something I've thought about myself is I went through a pretty prolonged phase where I was cavalier with risk, and then I got bit. I had a huge portfolio drawdown because, like most traders, I am a fucking idiot and I made poor choices, but luckily I was able to find my way through that. One of the things I'm curious about, we were talking just a little bit about kind of the psychology there behind different financial choices. And one of the things I feel like is a lot of my generation, I'm a millennial, I'm 31, but it feels like a lot of us are very risk averse. And I'm curious if you see that kind of thing from your side of the equation.
Yeah, I mean, nobody really likes to lose money. For the most part. I mean, there may be a few people that find joy in it, but I don't. No, I think most people are risk averse, especially as they've started to accumulate a little bit. I got $100 and I lose $100, who cares?
Right.
I'm buying some penny stock right now. It's $1,500. I lose $1,500. Who cares? If it turns out to be 800,000, sweet. But
Right.
but other stuff, even myself, even though I know, don't get emotional about investments. I put some money into a couple of funds, and then of course everything tanked, and I'm still like, ugh. And I know it will turn around, and I know I can play the game of waiting, but still emotionally. So, hey, don't go in and look at your brokerage statement every day. If you've got a lot of money sitting in things you're not going to move for a while, then don't go in and just remind yourself of the pain. Just wait it out. Like, don't create more anxiety. But I haven't come across a lot of clients that are willing to take a lot of risk. The client that I was saying that had that 700,000 worth of losses and high yield dividend stock, she was investing in stuff that was incredibly risky in her 80s. And she was like, I don't care, and she's like, because if I hit it, I hit it. And, worst case scenario, I'll sell my house. It's worth a couple million. But I was like, oh, this is so dangerous for you. She's like,
I love that.
I'm doing it anyway. She was a trailblazer. I loved her. She just recently passed, but she was, she didn't care, but she was not the norm. Most people are,
Right.
and you don't want to be from a scarcity mindset of like, oh my God, I have to hold on to everything forever.
Right.
You got money, it ebbs and flows. So you can't hold money so tight that it can't grow and leave. It's just going to suffocate if you just hold on to it. But finding that balance of tolerating a little bit of a little loss and a little bit of risk. But like, I don't even like going to Vegas like when I was 20s, man, let me go in and blow my money in Vegas. Now I don't even want to spend $100 unless I consciously say I spend $100 and then I walk away, because I don't want to give away $100. That's $100 that could buy a stock. That's $100 that I could do something with it other than just give it to the casino.
Yeah. And I like that, because I think a big part of at least finance for me over time has been learning like what I actually value, like what is worth the purchase for me, what is not worth the purchase for me, and where's the marginal utility. And I think you hit on a good bit of that there. So a couple other questions I wanted to ask you. Obviously, there's all different kinds of CPAs out there, different philosophies, different approaches to taxes. But if you were to summarize your approach to tax in general, how would you summarize it? Like, what's your general strategy?
So my strategy is, let's figure out how to avoid taxes. I love working with entrepreneurs because I've got corporations, I've got structures in place that I can use to my advantage. I don't really work with a lot of W-2 people because I can't do a whole lot unless you've got rental property and things like that. So I work with people with more complicated returns because I can actually make a difference there.
Right.
But somebody can walk in making $500,000 on a W-2. I can't do anything for you. There's nowhere to go. And so we work with people as a team. I don't look at tax returns as tax returns. I look at the work I do as relationships. So I'm in 1,000 different relationships because I've got 1,000 clients, and I actually care as much or more than they do when they're paying taxes. If they owe a bunch of money that we didn't foresee, I am like, oh my God, that's so painful. Yeah, I'm not writing the check, but I have compassion and empathy for my clients who, even though they know they made the money, psychologically, they didn't put the money aside. They were just like, oh, it won't be that bad. And then when we see the numbers, they're like, oh my goodness. And so I feel for them because I know they're not sitting around going, I should be putting away 25% every day. And oh, I need, like, we're not all sitting around thinking about taxes. It's my job. So I am always thinking about taxes and, oh, that's going to come back. And, oh, we need to plan for this. And I try to help people outsmart themselves. So,
Mm.
some business owners, they just don't want to take a salary. And I'm like, look, take $500 a week. It's all going to go to taxes. You won't miss it. And at the end of the year, we're going to have almost all your taxes paid.
Mm.
And then at the end of the year, we do it. And they're like, oh, this is much better.
Right.
It's all paid. Like, yeah, there are ways to do it that don't have to be big leaps. We can do things in baby steps, which is what I love. Small digestible bites. And so that's what I try to do with my clients, is lead them toward financial literacy, financial awareness, conscious, intentional planning around their money, so that they get a better outcome. But I don't try to do it by shame or telling them how stupid they are, but by just trying to show them, here's some simple ways incrementally we can start to get you ahead.
I love that. I love that mindset. And I can tell you, even from our first conversation, that you are a diamond in the rough, because I have talked to quite a few accountants at this point. And the way that you think about it is refreshing to hear, to be honest, because there's a lot that people can benefit from those kind of relationships, which really segues into my next question for you. Obviously, you already have 1,000 clients. There's going to be people that need a Bob Wheeler in their life. Maybe they're in Florida, maybe they're somewhere else. What are some of the things you think people should look for when they're shopping for an accountant or a CPA? When they're trying to make that jump, what are some of the qualities you think are useful for people to keep an eye out for?
Well, one of the first things I think is important to ask, if I'm in real estate, I want to know if the accountant's got real estate. Like, I want to
Mm.
know that they've had to actually deal with real time personally, with having to deal with the limitation of the $25,000, or having to deal with a 1031 exchange, or any of those things that are real estate. If I've got a lot of stocks and I've got all kinds of passive income and K1s, I want to make sure that that's something that they're comfortable with. It's amazing to
Right.
me. And one of the things that's been great for me is, I didn't want to be this standalone guy that worked out of his bedroom in his underwear doing 100 tax returns and calling it a day. I wanted to have other CPAs around me. I wanted to have a staff. And so I built a practice. And a
Right.
lot of CPAs go into accounting because it's very logical. And so they're going to play it as safe as they can. They're going to not cross a line. They're going to stay 10 feet from the line. Well, if the line's over there, I'm going to move 10 feet and I'm going to touch the line. I'm not going to cross the line. And so I think some CPAs are just very not willing. They're so conservative. I don't understand it, therefore you can't take a deduction. I had a client come to me and we were looking at the returns, and I said, you've paid about $20,000-$30,000 for the last 5 years, more than you should have. They were like, yeah, we just felt bad about leaving our account. And, they were getting older and we knew we were paying. And I was like, so you willingly paid 25,000 extra dollars
Shit.
for 5 years, knowing it was a bad decision because you felt bad. Don't feel bad. Like,
Yeah.
get the information, but you want to find somebody that you can gel with. If you want to be shamed, find a CPA that will shame you. I know a few of them. But there's a lot of folks out there like me that are actually trying to help people and actually care and really want to keep, like, we don't just do a return and go, there's your taxes, you owe money. No, we're going to go, wait a minute. You sure there's not this? We'll do a tax return 5 or 6 times going, wait. One more thing. Let me think about this. You sure? And oh, sure enough, there's another piece of the pie that just brought it down. And so we tend to, I tend to review tax returns 4, 5, 6 times, and I sleep on it. A lot of stuff happens while I'm sleeping. I wake up and I'm like, oh my God, there's a passive loss carryover I forgot about, or they have this other business. And I don't just do it one and done. Who cares? It's the Smith return. I'm looking at each one of these, thinking about how, if it were my tax return, am I doing the best? And so I want somebody that I know is going to advocate for me. I want to know somebody that knows how to deal with real estate. I want to know that somebody that's familiar with pension plans. If I'm a corporation and I'm trying to decide if I want a 401k or a defined benefit plan, I want somebody that understands those things. I want somebody that knows that if I start a DB plan and I ended on 1230 in the first year, I can get a double dip because I have a mismatched year. That a lot of people will come to me and go, you can't do that. I'm like, check with your manager. You can do it. And they're like, oh my God, I didn't know that. You should know that, right? So you want people that are constantly trying to learn stuff. There's so much out there. I don't know everything. I have a lot of experience. I know a few things, and I'm going to keep asking. So I don't go in with the assumption of like, I've got it all dialed in. I want to keep doing the best I can for people. I want to keep learning. So
I think there's so much value in that approach too, because it's exactly as you say, and especially as tax evolves and whatnot, it would be very difficult to be omnipotent perpetually. But I think, you have again, like the exact mindset I would be looking for, which is I know what questions to ask to get to the answer we need. And I think that that's tremendously valuable for any of your clients. So I know that we're coming up on time here. There's a couple lingering items I had for you.
yeah,
The first one is you mentioned money self-sabotage earlier, which was a very interesting terminology. I've heard of it before, but I'm generally unfamiliar with it. I would love to know a little bit more about that concept and what you see as it pertains to it.
yeah. So surprisingly, or maybe not, there are a lot of people out there that will say, I'm going to start a business, but unconsciously they'll say to themselves, I know it won't happen for me. I'm the one
Oh,
person
interesting.
that it's not going to happen for. Right. And so they'll still go in and start the business, and they'll do things to sabotage to be right about the fact that they're going to be the one person that can't make it work. Um,
Interesting.
I had a client who fortunately was very willing to talk, but every 5 years, her business would go into it would just go into the gutter. And, she'd be making $1 million, almost bankrupt. This happened. And she was a client for like 20 years. And so this happened 3 times. And I said, let me ask you, can we just talk a little bit? Let's forget about the taxes, but let's just walk me through what's going on. Like, you had this
Yeah.
amazing year, then all of a sudden this happens. And then what happens? And so we started talking it out, and she realized that when she loses all of her money, her mom comes in and saves her. And her mom really loves to come in and show her that she's her savior. And that's how she knows her mom loves her. And
Oh
so I said,
man.
God, that's a really long way to get an I love you.
Yeah,
Um,
that's deep.
and then once she realized it, she went, oh my God. Yeah, I could just ask my mom, hey, do you still love me? Right. I don't need to run the business into the ground to see if she'll come to my rescue. But that was an old
Right.
story, was mom will rescue me. And that's how I know she loves me. Once we got real clear on that, she was able to then say, okay, now I'm aware of what I'm doing. But when she would start to get depressed, nobody loves me, my life sucks, she would just slowly start self-sabotaging the business so she could get to a place of mom's going to save me. I had another client, and this happens a lot. I had a
Wild.
client that had their own business. It was failing. They were given an opportunity to go run a division of a company and make $250,000, 8 weeks of vacation, all kinds of benefits. And I said to them, look, your business is not working. People aren't paying you. You don't enjoy that. You love doing what you do. You should
Right.
take this job, close down your company. The lease is coming up. This is the perfect time to walk away and transition and really make bank. He said, my mom will be so disappointed. I can't do this proactively. So in essence, he made a
Thinking
choice to
shift.
yeah, he just,
Oh
yeah.
man.
And so he let the business fail, but it wasn't his fault. He didn't walk away.
Of
Right.
course.
But
Oh,
had he just walked away, okay, mom's upset a little bit. If you just said, hey, mom, these are the 2 choices. This is actually advocating for myself. And so rather than do what makes the most sense, people will stick with, well, I made a promise, or this person will be disappointed,
hmm.
and so that's the self-sabotage, is where I know better, but I'm not going to do it because it doesn't align with my story.
That seems so counterintuitive to me. I typically would assume business owners, super pragmatic, would, perceive the problem for what it is and solve for the problem. But obviously, you see this very like in-depth emotional side to this stuff. I wouldn't have guessed either of those stories. Like I just
Yeah.
like to me, it seems like if I see a business that's failing, I would think, okay, how do I maximize whatever I can out of this, and then
Right.
move on to the next. That's
But
pretty
well,
intense. So,
but
oh,
I'll share my own personal self-sabotage. So I was sitting for the CPA exam, and you have
okay,
to get a 70, 75 or 76 to pass.
Sounds like Marine
And
Corps grades.
yeah, that's all you need. That's all you need. You know, we're almost just like the Marine Corps. Not kidding. But I would go in and I'm like, man, if I could just get 75%. So I would get 75% of 75%. I'd get, and I couldn't pass. And so I took this course that everybody said, if you take this course, it will take you over the line. This is what you need. And the first night, the instructor said, listen, I'm here to help all of you pass the CPA exam. But if you right now in your heart know that you can't pass the CPA exam or that you won't, you should get your money back, because I guarantee you, you will make yourself right. And I said to myself, I know I'm not going to pass the CPA exam, but I hope this course will be what it takes to get me through it. And I didn't pass. It wasn't until I decided that I could pass it that I passed it. And it was frustrating because people assumed I was a CPA before I was. And they're like, but so-and-so's a CPA and you're smarter than him. And I'm like, yeah, I'm a bad test taker, right? I had to find all these stories as to why I didn't do it. But the truth was, I had a belief that deep down, I wasn't sure I could really be a CPA. And so I just kept letting that narrative dictate until I was ready to go. That's not serving me, and it's BS.
Right. I cannot tell you how much I identify with you, because for the longest time, I would always say to myself, I'm not good at math. And I used to say that to myself all the time. And guess what? I wasn't bad, but I wasn't good.
Right.
And then I randomly just decided to stop allowing myself to say that.
Yeah.
And then all of a sudden during my undergrad and grad, I took a bunch of statistics courses and it was off to the races. I still am not a savant at math, but I'm competent. And
yeah,
I love that you are even willing to share that kind of story, because I think that a lot of people exhibit, again, both of us, right? We exhibit that exact behavior, and it's probably pretty prevalent. So I think that's a really powerful message. So we are wrapping up here. The last question I wanted to ask you before we get into how people can get a hold of you and things like that is, what keeps you doing what you do as a CPA? Like, why do you choose to continue to run your business? Why don't you just go be a full-time comedian, go do something else? What keeps you there?
Well, a couple things. It's always been there for me when everything else wasn't, and it's something that I'm good at. And so that's been something that just gives me comfort. But the reality is, I love people. I like being with people. I like connecting with people. And for me, it's a way that I can help people in an industry where not everybody's willing to help. And I think most of my clients get that I'm advocating for them and that I actually really care about them as a person. I actually care more about making sure they feel good about what we've done than me making an extra $300. I'd rather lose $500 or waive the fee on a tax return than feel like I've given up my integrity. And I think people hopefully resonate with that. But I like helping people, and this is something that I'm good at. And it's something that just, even when I worked for other CPA firms, I would help do things. And of course, my bosses would go take credit for my stuff. I'm like, oh, that's sort of not nice. But at the end of the day, I knew that I had a knack for this stuff, and that, I love it. It's something where I can feel like I shine.
It's awesome. I had a sneaky suspicion that was going to be something in line with your answer, because I could tell, that even the information you've really shared here is impactful, and that, like, wanting to help people really, I think is so awesome. I love that about you. So speaking of helping people, if somebody needs your help, how can they get a hold of you?
The best way to get a hold of me is our website, The Money Nerve, which also has my CPA firm. It's got my workshops. It's got all kinds of free resources, themoneynerve.com. And then info@themoneynerve is the best way to reach me. And again, I've got a CPA firm, but that information's on the website. It's just easier to have it all in one place.
Sure.
And we can help people with their taxes. We do a lot of international. We do multi-state. Small business, corporations is our sort of niche. And but I also do other things, workshops, work with people one-on-one on their money mindsets and financial coaching / therapy. Anything about money. Let's talk about money, and let's try and take those emotions out.
Bob, you're absolutely awesome. Thank you so much for joining me. I'll obviously link to how people can get a hold of you in the video description below. So, make sure to check that. And until next time, I hope you have an absolutely awesome weekend. It was a pleasure connecting with you.
Thanks so much. I appreciate it. And I hope your listeners gain something.
Yeah. Thank you so much, Bob.